Yeah. This is the paper we'll be doing today. I will start with question 2, cost accounting, 40 marks for 32 minutes. 2.1 is all about concepts. For each item below, indicate the appropriate cost category from the following options. Write only the words next to the question number 2.1 up to 2.1.5 in the answer book. In essence, you need to match those words in a bold box with each of the given sentences or explanations. 2.1.1 asks, wages paid to the factory supervisor. Choose one word that defines wages paid to the factory supervisor. That will be indirect labor. If indirect labor was not given, we were going to choose factory overheads. Advertising falls under selling and distribution. Office telephone, that is administration. Materials used to make the final product, that will be direct material. Insurance paid by the factory, obviously, that will be factory overheads. That is it. To answer that, 2.1.1 will be indirect labor, 2.1.2 will be selling and distribution, 2.1.3 administration, 2.1.4 direct material, and 2.1.5 will be factory overheads. For 2.2, we need to prepare raw material stock, factory overhead cost account, work in progress stock account, and finished goods stock account. Let us quickly do it. This is the information that we have. These will be balances at the beginning of the year, which is the 1st of March 2021, and the end of the year, which will be the 28th of February 2022. This is more information given to us. Additional information. Let's get on with it. For raw material stock, this 72,000 will be balanced at the beginning of the year. As a matter of fact, all of these will be balances at the beginning of the year. Let's start with raw material stock. Balance on the 1st of March 2021 will be 72,000. Please note that raw material stock is an asset. It increases on the debit side and it decreases on the credit side. Factory overheads will also be an asset as it will form part of the cost price of an asset or finished goods. It therefore increases on the debit side and decreases on the credit side. Work in progress. Now, this is an asset of stock, which is stock that is not yet finished. It'll also be plus, minus. Lastly, we have finished goods, which was also given to us. So we have recorded all those opening balances. Let's get to the information. We've got raw materials purchased for cash during the year of 850,000. Carriage on purchases paid on raw materials will be 53,000. Custom duties paid will be 124,000. All this information relates to the purchase of raw materials. It'll therefore be recorded on the debit side of your raw material account. You will have bank, 850,000, which is the raw materials we purchased for cash. Carriage inwards. This is the cost of transporting raw materials from the supplier to our warehouse or to our factory. Which will be 53,000. Custom duties is tax on goods that were purchased from overseas. And this information, it was given to us as 124,000. But when I was going through the questions, I saw something about raw materials. They say, which is under additional information and adjustment, it says raw materials costing 127,500 were purchased on credit from alt traders. A foreign-based company has been recorded. Custom duties of 15,000 on this purchase that was paid was not recorded. I am going to take that 127,500 multiply it by 15%. It will give me 19,125. This also qualifies to be custom duty. However, am I supposed to record that 127,000? The answer is yes. On the debit side, for custom duties, I'll have that 124 that was given to me as a balance. I will add it with this 19,125. My custom duties in total will amount to 143,125. Then on the debit side, I will record these raw materials that were purchased on credit, which will be 127,500. Even though they said they were not recorded, there's no way that amount was included. It wasn't included in the 72,000 that is the balance from last year. It was not included in this 850,000 that represents cash purchases. So that is why we had to record that 127,500. Now, we are going to take raw materials that we still have in the warehouse. These are raw materials that were not part of production, which is 54,000. I am going to take that amount of 54,000 and write it on the credit side as balance carry down. Then I'll find the total and you'll realize that the debit side is bigger. On the credit side, we only have that 54,000. So add the debit side, so it'll be 72,000 plus 850,000 plus 53,000 plus 143,125 plus 127,500. That'll give you 1,245,625. I will write these totals on both sides, and you will notice that the credit side is missing a value, is short, because that 54,000 can miraculously give you 1,245,625. So I'm going to take that 1,245,625, subtract 54,000, it'll give you 1,191,625. The reason why this didn't make it to the closing value of your raw materials, it is because it was taken to production. This 1,191,625 represents raw materials that have been taken to production to be converted into cash. Not cash, we first convert them into finished goods and then later on convert them into cash, turning them to cost of sales. For now, we are just going to take them to the factory to convert them into finished products. These raw materials that are taken to the factory is called work in progress, or the production is work in progress. So it will be taken to the work in progress account. Highlighted. That balance carried down will be balance brought down. So it will be the opening balance of our raw materials the following year. Great. Let's go to factory overheads. What makes up factory overheads? Factory overhead is made up of indirect labor, indirect material, water and electricity, insurance for the factory, or all the costs that were incurred to ensure that the raw material was converted into cash. The first item I'm going to put here will be indirect material. Now, indirect material that were taken to the factory will be calculated exactly the same way as we calculated direct materials that were taken to the factory. You will simply do this by taking the opening balance of your indirect material, which is 7,000. You will add it with any purchases minus returns plus carriage on purchases on indirect material minus the closing value of your indirect material. When I look at this, we've got indirect material purchased amounting to 43,000, which completes our formula, and there's no other information about indirect material this side. So for indirect material, I am going to take the opening, add it with that 43,000. 43,000 represents indirect materials that were purchased. If there were any returns of indirect material, we were going to subtract them. And from the information that I see here, they were not given. So for indirect material, we'll take the opening balance of 7,000, add purchases of indirect material. You will minus returns of indirect materials. You will add carriage on purchases of indirect material. And then you will minus the closing value of indirect materials, which was given to you. And that amount was 3,800. 7,000 plus 43,000 minus 3,800, it'll give you 46,200, which represents raw materials that will be issued to production. These will be used and will be part of a finished product. The next item will be rent. I use one simple principle when it comes to calculating all the other expenses. First, make sure that that expense is for the current financial year. So you look at the adjustment and make sure you apportion accordingly, and that expense is only for the current financial year. If there's any expense or cost that was included that doesn't belong in the current financial year, you subtract it. If there's any expense or cost that was not included, yet it was incurred in the current year, you include it. So I use that. So that is adjusting. And then you allocate. These costs that will come to factory overheads must only relate to the factory. Let us look at rent. Rent paid is 320,000. Question is, that 320,000, does it fall within the current financial year? More information will be under additional information and adjustments. They say rent and sundry expenses are allocated according to the percentage of floor space used. Now that has just answered your question. There was no adjustment with respect to rent and sundry expenses. So instead of using ABA, I call it ABA, which is adjust before you allocate. We don't adjust because there's no adjustment when it comes to rent. We allocate. And when we allocate, we only allocate the portion that belongs or was used by the factory. You will take your rent expense of 320,000 multiplied by 80%, and that will give you a rent for the factory, which will be 256,000. The next item will be sundry expenses. Sundry expenses paid will be 17,400. I am just going to take those sundry expenses, multiply them by 80% as well. There was no adjustment with respect to that. 17,400 times 80% will give us 13,920. The next item will be insurance. Insurance amounted to 42,000. Additional information to check if there's any adjustment? No, there's no adjustment. They just said insurance is to be apportioned in the ratio of 4:1:1. So the 4 is for the factory, the 1 is for selling and distribution, and the other 1 is for administration. You've done ratios in grade 8. Before you can allocate using ratios, find the total of your ratios. 4 plus 1 plus 1 will give you 6. 4 is for the factory. To allocate your ratio, using your ratio, you will take the cost, which was 42,000. But because we're dealing with factory overheads, we're only interested in the factory ratio, which was the 4. So you will take what you want, which is the 4 for the factory, and you divide it by the total. Because that 42,000 represents the total cost of your insurance. The principle is always multiply by what you want and divide by what you have. 42,000 is the sixth, the whole. We want only the 4 of the whole. You will therefore take 42,000 multiplied by 4 and divided by 6. It'll give you insurance allocated to the factory. And that'll be 28,000 rand. The next item will be water and electricity. Water and electricity amounts to 28,000. How are we going to allocate that, and do we have any adjustments? Water and electricity of 21,000 relates to the factory. The rest is shared equally between administration and sales departments. There we don't even need to allocate. It has already been given to us. So the 21,000 rand will be recorded under factory overhead cost. The total of your factory overheads will be taken to work in progress. So when you add all of this, so this account will not have a closing balance. All these costs will be part of your factory overhead. As a matter of fact, that part of factory overheads will be incurred in order to produce an item. So all these costs were incurred to produce the product. Hence, they'll be taken to work in progress. In total, this gave us 579,120. Work in progress already has a balance. On the debit side of work in progress, you are going to include the raw materials that were taken to production. I don't know why it's starting this from scratch, which was 1,191,625. You will put it on the debit side of your work in progress. It'll be joined by direct labor. According to this, it says for wages, we've got factory workers, which is that 763,000. And there are no contribution with respect to those factory workers, so that will be the direct labor. And there's nothing else. So on the debit side of work in progress, you will include direct labor cost, which is that 763,000. Then you include your factory overheads, which is that 579,120. So direct labor plus direct material, we call them prime costs. Then you include factory overheads. Combined, we call them total manufacturing cost or total production cost. All of these were used to produce a product. You are going to subtract unfinished product, which will be 62,000. The difference will be your finished product and will be taken to finished goods account. But you are going to take the closing balance and subtract it from the total, just like I've done under direct material. The difference here will be taken to finished goods stock. That 2,552,745 represents the cost of your finished product. Unfinished products will amount to 63,000 and we will start the new financial year with those. For your finished goods, you are going to take the total that we just got, which was that 2,552,745. It'll increase your finished goods. But we still have balance brought down for finished goods, which is our closing stock amounting to 165,000. When you take the total of your finished goods and you subtract the closing balance of your finished goods, it means that difference represents finished goods that were sold. These will be finished goods that were converted into cash. Finished goods converted into cash, their cost price will be called cost of sales. When we start the new financial year, we'll start the new financial year with finished goods amounting to 165,000. All right. Let's go to the second part. The information that is given here will enable us to answer these questions. The first question requires us to provide calculations to show that the break-even point for the year ended 28 February 2022 is 507 units. Please note that break-even point will always be in units. So to calculate break-even, you need to first remember the formula. The formula for calculating break-even will be fixed costs divided by the contribution per unit. Contribution per unit is simply selling price per unit minus variable cost per unit. According to the information that we've got, fixed cost amounted to 136,890. Selling price per unit is 860. Variable cost per unit is 590. So you will take that 136,890 divided by selling price per unit of 860 minus variable cost per unit of 590, and this will give you a break-even point of 507 units. Now it says, explain using figures why the owner is not happy with the break-even point. Note that break-even point is a point or the number of units that you need to produce in order to break even. To break even means when you produce 507 units, you will make neither profit nor suffer a loss. It'll be enough units you produce to cover for your costs. And that's it. That's what break-even point is. Now, to get the perspective of what they want here, they're saying that Little Angel's toy manufacturers. Little Angel toy manufacturers manufacture scooters for toddlers. The information below was taken from their records for the financial year ended 28 February 2022. And this is what we have here. So we need to provide information to show that break-even point for the year ended 28 February 2022 is 507, which is that. And then they say, explain using figures why the owner is not happy with the break-even point. I'll come to that. For me to be able to answer that question, I will look at this information. Number of units produced and sold was 480. So the business, Little Angels Toy Manufacturers, they only managed to manufacture 480 units or toys, which is lower than 507, which is your break even. Note that if you manufacture units less than break even, you will suffer a loss. And if you manufacture units more than break even, you will generate profit. Here, the owner is not happy because it means the owner will suffer a loss. A loss will be equivalent to units that are below break even, which will be 507 minus 480, which is 27 units. The business is incurring a loss of 7,290. Question is, how did they get that 7,290? They took the 27 and they multiplied it by the contribution, which was the 860 minus the 590. You got it? Last question. The owner has been importing plastic material from Botswana. She wants to change to a local supplier who's supplying plastic material, which is of a lower quality. Do you agree or disagree with the decision? Give a reason for your answer. The disadvantage of buying low quality product is that it will lead to the reduction of sales. Customers will not buy your products if they're of low quality. That's why, according to the materiality rule, we are required to show debtors allowances separately. Debtors allowances shows how much of the goods you sold were returned by debtors. Hence, when debtors allowances is high, it means customers were unhappy with your product, and that is because your product was of low quality. So no, we disagree with the decision. That is because it will result in low quality product and customers may not buy low quality product. And as I said, they will lose customers, resulting in less sales. And customers can go as far as suing her for low quality products if they do cause harm to the kids. You have heard of companies that are facing class lawsuits, right? One of them will be Tiger Brands. All right. That'll be it with respect to this paper. I hope you enjoyed it. And that'll be it from me. Kgotso.